All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan. Today we're doing an AirBNB stock analysis. Very excited because I have money in this company and I don't really know that much about it.
Oh boy. So if you guys enjoy entertaining stock market content, consider giving us a like and subscribe below. That's what we're all about here, is open, honest transparency and our documenting our ventures and becoming investors. So
let's do it.
AirBNB looks like a lovely place for an Airbnb right up the top of this mountain, you think,
It does. Also, full disclosure, I have not seen this presentation, so I'm really hoping that he makes me feel better about my investment.
Yeah, no, there's some positive aspects. So, like a little bit about AirBNB's backstory. Started by these three guys basically here. This guy is actually the current CEO. It's like Brian Chevsky. Started as in 2008. They basically had an air mattress that they were renting out. That's why it's AirBNB, in case you didn't know that.
That's actually hilarious. That's pretty funny.
Yeah, that's what air stands for. And then building up quite a bit over time. Now, December 2020, they went public. So that's when we're going to talk about the story a little bit here more succinctly about what they're looking at in terms of the market going forward. So it's a platform technology, which means high profits someday, right? Because they don't have to own all these individual little rental sites. That they provide the platform, and then they get to take a portion of the revenue because they own the platform.
Yeah, I would think that they're profitable faster because of that.
Yeah, I mean, I love that business model. Great business model. All right, it's once you're in the technology kind of space, their gross profits are huge. Another thing that's become really cool with Airbnb is it's become both a noun and a verb, right? Like you can be like, I'm just going to Airbnb it.
Yep. Yeah. That's great branding.
Yeah. Oh yeah. Yeah, exactly. It's like Kleenex, how anytime you want to clean your nose, you think of Kleenex, it's absolutely hard to put a number on what the value is of that becoming like a common term in the language.
Is that not called a Kleenex?
No, it's actually called facial tissue. Kleenex is a brand name owned by Kimberly Clark. Anyway, so Airbnb, this is how they make their money. They take host fees for 3% from the actual people renting the properties, and up to 20% charge in addition on the person renting the property. The other thing that you're kind of catching here with Airbnb is that there's a strong kind of trend in terms of generations. I've personally never stood in one. Have you stood in an Airbnb, Dylan?
Yeah, like 12 times.
Yeah, I kind of figured as much. Looking at their website as part of my research in this, I'm like, I should just go ahead and book one of these at some point just to check it out, see what it's all about. Some cool experiences.
It's pretty nice. The only thing that it doesn't work is when you're going to a place where it's a very small town. Like if you're going like a nature thing, like we went to Antelope Canyon, there's not like a good Airbnb there.
Yeah.
But like nice places like woods and stuff, like it's way better.
Love it. Yeah, that's certainly cool, especially with this work from home kind of trend after the pandemic. So what industry are they trying to disrupt by being this tech company? They're looking at the hotel revenue. This is the U.S. hotel revenue by year all up to 2018. So talking about a $200 billion a year industry, right?
Yeah,
pretty sizable. And are they just focused in the U.S.? No, they're looking at global. Globally, you're talking about an industry that's somewhere in the $400 billion range. So much big pie that they can take a piece of. Yes, the world was really shut down last year, so everything's coming back though slowly. Some things more aggressive than others. This is kind of, we're talking about the worldwide travel rebound. U.S. we're kind of really fortunate in that we have the ability to get the vaccines pretty early, so the U.S. is rebounding a little bit faster than the rest of the world, but the rest of the world is also rebounding pretty aggressively. 43% year-over-year growth. Expect to see about $300 billion globally.
Mm-hmm.
Pretty sizable. So
yeah, it's a lot.
Yeah, and this is the other thing we're talking about, the demographic stuff. So, when we're looking at I noticed they have a typo here. Kind of by age, who stays in Airbnbs for the most part is younger folks. But this is a great trend you can get in front of if you invest in Airbnb. Now you're in a position where you're gonna be able to capitalize as these younger folks, kind of grow in their careers and their income grows, and they're able to take more and more vacations.
Yeah, I think I remember I stayed in Brooklyn, and it was not like the hotel price was like 9 times the Airbnb price. There's no way I can even swing that. It's ridiculous.
Yeah,
it's like a win-win.
Out of It was Airbnb's like top 10 destinations. They were cheaper than the average hotel rate in like 7 of the 10, something like that. So very
Yeah.
competitive product.
I'm surprised it's not more because like a hotel in Manhattan is disgusting. And I stood in Airbnb, it was like I don't know, $300. It wasn't crazy.
Yeah, that's awesome. Um, I want to look at the Airbnb company a little bit and like see what position they're in is following this whole pandemic. So this is from their balance sheet from their 2020 end of year report here. They had sitting on $6.4 billion in cash, and their total long term debt is $2.2 billion. So yeah, pretty well capitalized.
That's attractive, right? That's a Vinny attractiveness, right?
That is, yeah, it is. They're not laden with debt. However, now we have to look at their ongoing kind of financials. That's not as pretty. So this is from income statement, right? So we'll do the trailing 12 months here. $3.4 billion trailing 12 months of revenue. And like I said, that includes the pandemic. So I understand it's far from normal. But look at the gross profit margin with that $3.4 billion in revenue, $2.5 billion in gross profit.
Yeah, that's a crazy high percentage.
Yeah, right. That's what you get when you get a technology company, because their marginal cost per unit produced is relatively low. Every time someone gets an Airbnb, they don't have to go out and spend a whole bunch of money just to accommodate one additional unit on their platform. Sorry. But my real question and concern here is, are they being fiscally prudent? What are they doing with all that, that kind of that gross profit? So selling and merchandising, I understand they got to kind of grow their platform, get the name out there, run the TV commercials. So 2.3 billion. So they used pretty much all their gross profits on selling advertising last year. But this is the one that really caught me: research and development, $2.8 billion.
All that was spent to make the site a little bit easier to click.
Yes. Mm-hmm.
Well, you know what's weird about that is if you look at the other years, like they only spent like $600K in 18.
Oh, these are millions, but
sorry, 600 million in 18, and then 976. They like tripled it from there.
Yeah. Yep. Mm-hmm. Yeah. So that was interesting. So these are the categories they talk about under their research development budget. Experience research, product specialist, survey science, research operations, and the marketing research. All of them are, I believe, likely to be useful to Airbnb long term. There are areas that I definitely think they, by improving their platform, they can see some return on investment. But that number is crazy high, and that needs to really come down. I found an interview on here about with one of their research and development folks. Actually, their head of research just recently left a month ago, and they're now the head of research for Robinhood.
Oh, that's good.
Yeah.
It's great news.
Hopefully with that, they can decrease the budget a little bit. Maybe that's what the parting was all about, was someone being a little crazy with the spending. So where does that put us right here, right now? So like I said, I don't love that. That's my only real knock against Airbnb, the company I've seen so far, was that the research and development costs are extremely high, but I digress. So a great company, great trends. I love the industry. The question is, what do we pay for the company, right? We have to figure out how we value them. They have not been consistently profitable. They were profitable in 2018, but they've lost money since then. All right. So we have to use alternative metrics. So the metric I decided to use is price to sales. It helps us kind of put all these high growth companies on like a similar kind of footing and seeing how much we're having to pay for the revenue. The current price market cap for Airbnb is $92.4 billion. Okay. This is as of recording on July 10th, 2021. The predicted revenue for 2021 is $5.4 billion, according to analyst consensus on Yahoo Finance. So that gives us a roughly 17.1 price to sales ratio.
It seems like a lot.
It is. It is. You want to see some other high flying tech companies and see where they are price to sales ratio wise?
Yeah, you got that?
Yeah. I do. There's some other price to sales ratios for you. So Etsy, I think, is a very reasonable kind of comparator. Different industry, but similar in that they both run the platform on which people can market their home, properties or goods. And Etsy's trading at a 13 price to sales to ratio. eBay, people forgot about eBay, although they still make money. All the way down here to 4 price to sales ratio.
So buy eBay is what this AirBNB analysis is buy eBay.
Buy eBay or Expedia.
Oh boy,
I know, right? Uber, Square, 2 other high flying, high growth, companies with price to sales ratios around 8 or 9. All right, PayPal 15. That's a real outlier for you too, right?
I'm actually pretty surprised Uber's is 8. I don't know what this is about. I thought it would have been way worse than that.
Yeah, that's true. Actually, that was a little bit more reasonable than I thought. Honestly, Uber was going to be, and Square was a little lower than I thought it was going to be too. So I compared it to the hospitality industry, and now all these numbers for the hospitality industry are price to sales ratios as of now. Given the fact that they had a pretty bad year, but the stock has now kind of rebounded some. So these are all significantly above their historical price to sales ratios for these companies. But this is kind of the range you're looking at from the 15.96 for Booking.com or Booking, and all the way down to the 5.64 for Expedia. Expedia is one of the best comparators because not only do they have Expedia and as it Hotels.com, I think they also own VRBO, who is considered the largest competitor for Airbnb.
Yeah, that's what I was gonna say. I just looked up who's the biggest competitors because I always just use Airbnb and it looks like it's Booking.com, Expedia, VRBO.
Yeah, exactly. So you're looking at Expedia being this subset of VRBO being a subset of Expedia and 5.64 for price to sales ratio. So they'll be able to capitalize from not only this kind of trend of people subletting their homes, but also kind of more conventional hotel booking experiences.
Mm-hmm.
So I ran some numbers. I gave it a price to sales ratio of 7 and of 10 to kind of see what the stock price would look like. Yeah, I know it hurts a little bit, doesn't it?
Oh, I got a couple calls in this company.
Yeah. What a stock does in the short term has nothing to do with the underlying value. Okay, so I just kind of want to give you a couple of price to sales ratios here of 7 and then 10x, and then see what that would look like in terms of the stock per share price. They have about $600 billion shares outstanding. That's the other thing too. You have to think about companies like this issuing stock-based comp. So this number right here is going to continue to rise.
Wait, 0.6, right?
0.6 billion. Yeah.
Oh, I thought you said 601 billion. I was
like, 601 million. Sorry.
Yeah.
But yeah, you're looking at realistically, if you want to get down into the 7 to 10 price to sales ratio, which is consistent with other kind of high flying tech stocks, including your Ubers and your Squares, you're looking at more of the $63 to $90 a share price, which is half of where they are right now. Yeah, I know. It hurts just a little.
It's in my it's in my Stem account.
Yeah,
I just looked at the chart.
Yeah, the chart is a different story, though, right? What the stock's going to do in the short term can be very different from this. People are just kind of blindly piling into this trade, and I think the company's cool. I love what they're doing. I'm not willing to pay 17 times sales for the next 12 months to buy the stock right now.
Yeah, that's a lot more than I would have thought. I would have thought all you have to do is make the site. What are they spending $2.5 billion in R&D research for?
I don't know.
What are you guys doing?
A great group photo that I almost added in here that was just the dozens of their research and development folks with PhDs and data scientists. I was like okay.
You have the product. It's just it's just the site. Now it's marketing. That's all you have to do. Yeah. The site's already very easy to use. What on earth are they spending the money on?
To give you context too, I think Apple's R&D budget last year was $18 billion. So
that's actually worse. You should have put that in there. That's really bad. Because they build chips, they build all these computer products, they have all this stuff they're doing. They're coming out with a new line of like M2, M3 chips. What on earth are they spending money on?
Yeah, that's aggressive. The base business I love. I think it's, like I said, you're getting ahead of great trends. In terms of like demographic stuff, it's bound to be highly profitable on like a base operating system. But it's just a question of whether or not management will allocate capital reasonably, and when you can buy in at a reasonable price.
That's a stupid amount to spend. Doesn't make any sense.
I love it.
That's more than AMD spends.
Yeah. Yep.
Yeah, that's more than AMD spends. Look what they're doing.
I know. I think, in my opinion, after doing this research, I've basically included that AirBNB as a company I'd like to own. I just, am not willing to buy them anytime soon. I'm just I'll watch them.
They have a toddler running their RD compartment. Department. They're probably like going to put like Airbnbs in space, and that's what all this money is going towards.
That would at least justify it.
Jesus. Well, that's disappointing.
All right, guys. Well, thanks for tuning in. Let us know what you think about AirBNB in the comments below.
And how much money I might lose. Have a good one.
See you in the next one.